Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, March 28th, 2025. So I have to get this one out a little bit before the market closes here, about 3 hours before the market closes. But I don't really think too much is going to change here in terms of what we're going to be looking at. It's always interesting to do these videos on a Friday because I only get to talk to you guys once per week, and it's at the end of the week. So I kind of go back and forth in terms of whether we should be just focusing on next week or whether we should be focusing on kind of the bigger picture that's setting up. And really, I think the best thing that I can do for you is tell you what I'm doing and then how I'm preparing. So what I've been doing is really just focusing much more on day trading this week. I really have not been able to find any clean spots to get swing long. Last week showed some promise, but then this week pretty much immediately has given that back. So just focusing more on day trading because the ranges intraday have been rather large. So instead of committing to a long or a short, you just come into the day fresh and trade whatever the market is presenting you that day. I think that makes the most amount of sense. So that part is relatively clear in terms of the volatility being elevated, and when volatility is elevated and there's no follow through, that it makes a lot more sense to take a day trading perspective on the market. So in this video, I'd like to just maybe focus on the longer term stuff that I think will be a little bit more consistent, that will last through, a couple of days. Because if I tell you that it looks really, really bearish right now, then, by Tuesday, April 2nd, when the tariff stuff comes out, maybe that's a buy, sell the rumor, buy the news kind of thing. And so that could change the board. But at the end of the day, I think I have a relatively clear picture in terms of the longer term stuff that I want to share with you. And let's go ahead and dive in. Normally we look at things like, we look at a lot of different things, but this time I'm going to try to just really kind of show you the most important thing that I'm looking at, which is a little bit of a longer term point of view of things, which I think, in my opinion, crystallizes everything else. So if we start here on the SPY, the weekly chart, the weekly chart is certainly starting to take some damage. You can see that this is the first time that you've counteracted this buy signal that you had way back here. Very clean buy signal being counteracted perfectly by a very clean sell signal. So this is a different animal than it was here or here or here, right? You've had pullbacks before, multi-week pullbacks, but then none of them have happened within the context of an actual sell signal alignment on this indicator. So one, that immediately colors my point of view. The idea of calling a low here or looking for a multi-week rally, anything like that goes completely out the window. I don't have the evidence to support any of that. If you put a gun to my head and said you have to swing trade this market and you have to choose a direction, clearly I have to choose down, because this signal, as clean as it was back here, see how pretty that is when all the arrows align. You have literally the exact same signal in reverse. So longs here, especially if you think that you're going to sit in them for longer than a 24-hour period, they're going to be tough. Okay, so then we go to the daily chart. Well, what's happened? Well, you had a very steep drop. You had a nice pop here into the 200. You've had failure at the 200, and now you're starting to pull back in. This is really starting to look a little bit bear flaggy to me, right? Doesn't that look a little bear flaggy with the potential for a much deeper breakdown? This candle that we're putting in this week has completely engulfed last week's candle as well, which is a very bearish signal. It does require confirmation, but it is not a good signal, especially in the context of the existing signal down here. So that's not particularly good. And of course, just the chart itself is a negative 33. So that tells you quite a bit as well in terms of what's going on there. If we go to the QQQ, same thing, just in reverse. So almost literally the exact same scores. Not really anything else to look at here. Everything that we just talked about on SPY will apply to the QQQ. I do want to show you this chart though. This is the Mag 7 index. So this is a chart that encompasses Apple, Amazon, Google, JP Morgan, Meta, Microsoft, Netflix, Nvidia, Tesla, and Taiwan Semi. And the reason I want to show you this chart is because, well, this actually has an even stronger signal than the broader indexes, right? So the broader indexes, SPY and Qs, I didn't see a daily squeeze on those, whereas I do actually have a daily squeeze here on the Mag 7 index, right? So keep in mind, this chart will dictate where the market goes. This is $15 trillion worth of market cap, and if this chart gets clipped for 3% or even 1%, it's going to put a tremendous amount of weight on the indexes. So what do you have here? Everything's pretty much exactly the same as we've discussed, but you can see the signal from back here, right? And again, look at the amount of movement you got off that signal. And I just want to stress this. That's a pullback. That was a pullback. This is a very deep pullback. And notice how the indicator did not react in a negative way to those pullbacks, which allowed it to go higher. This time you're getting a pullback, and it's visually probably as deep as this one, but you see how it's actually completely shattered the indicator. So it's a different animal for sure. And then lastly, I would just draw your attention to this one dot squeeze here that's developing. So this likely triggers as soon as next week. The bias has to be lower, but again, I don't necessarily want to talk about next week because April 2nd could just be kind of a surprise everybody kind of day and it goes up. Although it seems unlikely. It seems like Monday is probably setting up for a pretty steep drop. And then we go into Tuesday and we see what's up there with the Tuesday, Wednesday, we go and see what's up with the tariff stuff that happens on April 2nd. But I would be very careful for Monday because this is the kind of situation that could create a very kind of nasty drop. But again, I do want to refocus also because next week's kind of a toss-up, and I'm frankly just going to go into it and look for day trading opportunities just like this week. But longer term, I think that the signals are certainly starting to align for something much, much, much worse. So when I've been talking in the room, I'm looking for something like, I mean, you guys in the room have heard kind of what the parallels that I've made. The parallels that I'm seeing right now, the signals are worse right now than any time in the last 40 years that I've seen. Right? And in the last 40 years, you had .com, you had the financial crisis, you had COVID. And the signals now are actually worse than all of those. So where's maybe a bright spot? The only bright spot that I can see isn't necessarily in the charts. It comes from sentiment. And it seems like everybody is giga bearish. Maybe I'm wrong, but it seems like everybody's really bearish. And when everybody's really bearish, it doesn't usually tend to play out. The problem is that I'm not seeing those signals in the charts. I'm only seeing that in terms of sentiment. So, does it happen when everybody thinks it's going to happen is the question, and we will stay tuned to find out. So let me show you this signal here. This is probably the biggest signal that I'm seeing. So I just showed you some very meaningful signals on the weekly charts. And again, I show you that because it'll guide the path at least until that changes. So the idea of swing trading for longer than swing trading long, I think you can swing trade short with these signals. I don't think you can swing trade long with these signals until they reverse. So just be very, very careful out there with knife catching anything, especially things that are in the risk basket. So basically all of tech, right? Like I think things like maybe like Coca-Cola, Philip Morris, utilities, all that stuff can maybe work, the super defensive stuff, but the risky stuff is really what's vulnerable here. So let me show you this signal here. So now we're looking at a monthly chart of the SPY here. And I want to draw your attention to signal alignment. So there's going to be 3 little checks here that I'm going to be looking for. I'm going to be looking for what's the current arrow up here. This is a pivot point study. So this is going to tell me what the current arrow is doing. Then I'm going to be looking here at the trend oscillator to see what the current arrow is telling me to do there. And then lastly, I'm going to be looking at the trend, the high-low pro, and asking what does the arrow look like there. And what I'm looking for is points in time, like right here, where everything hits, right? You get an up arrow, you have up arrows, and this gave you up arrows from way back here continuously. See that? Very clean, very nice. Well, what do you see right here? For the first time since October of 2023, almost 2 years ago, you now have a juxtaposing down arrow here. Okay, if that was just on its own, it wouldn't be that big of an issue. But notice that when we start looking lower, we also have a down arrow there. And notice that when we look even lower than that, we have another down arrow here. So what does this mean? I think that by the time this is all said and done, we have to give back the entire move above this excess high. So basically that takes us into about 480 on the SPY. So that's a pretty meaningful drop, right? We're trading about 560. If I'm saying 480, that's about 80 points, 800 SPX points, if that were to happen. So be very careful out there. Again, I think that the strongest thing that I can share with you is just the bigger picture stuff, because I think there's going to be a lot of wiggles in between. You're going to have weeks that are up, like last week, and then folks are going to put out their videos saying that it's the bottom, is the bottom in, things like that. And so you want to be very careful with that way of thinking, because if you get caught up in the daily wiggles, it might look like there's something developing, but those small wiggles then have to develop into much larger patterns on these larger time frames, and the level of significant damage that's been done to the larger time frames is notable, and it's consistent, right? It's not like I'm getting 100 different signals and I'm choosing this one. It's been very clean about giving very clean signals, and they're all pretty much well aligned. So yes, you will get bounces. Yes, they will be very large bounces, because bear market rallies tend to be, I hate to say the word bear market rallies, counter trend rallies tend to be some of the strongest ones. So you'll have 2% up days, maybe a 3% up day here and there. But by and large, unless the larger signals change that I just showed you, mostly the weekly chart based on SPY, as well as the monthly signal that I just showed you here, unless those change, and it's going to take quite a lot, unless those change, I think we have to go back and retest that 480 breakout level, and then we'll recap the larger picture again after that. So going into next week, just be very, very cautious again. I think there will be parts of the market that will benefit from this, mostly the defensive parts of the market, like staples. Philip Morris I think looks decent, Coca-Cola looks decent. Maybe some healthcare looks decent, but any of the stuff that actually matters, semiconductors, software, technology as a whole, anything high beta is probably going to be in the crosshairs of the market until we either A, put in a reversal signal, or B, get down to some of these lower targets. So we'll be back next week. It should be an interesting one, right? We'll start a new month. I know that April has a very strong seasonality. It has the strongest seasonality of the year, I believe. Be very careful with that way of thinking. Again, just because you flip a coin 10 times and it lands 10 times on its head does not mean that the 11th time has to be tails, right? Each flip of the coin is an independent event. It has no memory of the past. And yeah, we'll just go ahead and cut the video there. We'll see how next week develops. I will be going into it with the plan to take advantage of the volatility by day trading. Otherwise, it becomes too frustrating to try to swing trade anything. Whereas if you're flat and day trading, you can actually take advantage of the volatility. And then we'll continue to check in on the bigger picture stuff that I shared with you in this video. We'll do it much more briefly in future videos, but we'll just check to see if anything's changing. If anything's not changing, we'll continue to guide lower and use the long-term stuff as our North Star, and we'll build on from there. All right, guys, that's my time. I hope you have a great Friday. Have a great rest of your weekend, and I'll catch you back in here next Friday. Cheers.